Hello traders, it's Ombututu FX. So welcome to my YouTube channel. So today I'll be talking about trend following. If you're a new subscriber, please subscribe, like and share. And if you're a returning subscriber, please like and thank you for watching my video. So let's start. So today I'll be talking about trend following. Yeah, most people will say your trend is your friend. Right, trend is your friend. So what am I saying? I'm saying if you're a trader, make sure you're following the right trend. So basically, I'll be talking about some things. So number one, I'll be talking about types of trend. Number two, I'll be talking about how to trade trending market. Number three, I'll be talking about entries. Number four, I'll be talking about exit. And lastly, I'll be talking about examples in my chart. Okay? Yeah. So this is my phone number. If you want mentorship, if you want free trading signal, and if you want to join my VIP trading signal, you can contact me on WhatsApp. My number is there. So let's start. Trend following. Types of trend. We have three major types of trend. Number one is uptrend. Number two, downtrend. And number three, ranging market. You got me, guys? We have three types of trending market. Number one, it's uptrend. Number two, it's downtrend. And number three is ranging market. Yeah. So, as a trader, make sure you're trading either on an uptrend or a downtrend. And as a trader, don't trade on a ranging market. You know, don't trade on a ranging market. So let me show you examples in this chart. I want to show you an uptrend. So an uptrend is basically something like this, you see? This thing that I'm doing here. So this is an uptrend. An uptrend is when a market is making higher highs and higher lows. Like this one, you see? This one, this one, this one, this one. So this is higher low, this is higher high, higher low, higher high, higher low, higher high. So basically traders, we trade when the market is making higher highs and higher lows. So this is an uptrend, you see? This is an uptrend. So I want to show you something. I want to show you a downtrend. Let me show you, let me draw here a downtrend, you see? So a downtrend is basically when the market is making lower highs and lower lows. Lower highs and lower lows, you see? So this is lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So this is downtrend. Uptrend, downtrend. You see? I know you're getting these things. I know you know what is an uptrend, and I know what is a downtrend from now. So I want to show you a ranging market. A ranging market is basically when the market is not making higher highs and it's not making higher lows. Let me show you. So you see this. This is a ranging market. A ranging market is when the market is consolidating on one side. You see? That's a ranging market. A ranging market is when the market is not making higher highs and higher lows, and it's not making lower highs and lower lows. Actually, it's moving something on a straight line. You see? A straight line. So it's making something like a support and resistance, something like that. So actually, this is our support area, and this is our resistance area. So this market is consolidating. This market is ranging. You get me, guys? So you can see the difference on an uptrend, downtrend, and a consolidating market. So traders, they trade uptrend, they trade downtrend, and they don't trade consolidating markets. You see, when the market is making moves like this, please get out of the market very fast. Turn off your laptop and go on a run, go on swimming, go on a walk, and come back later. You see, guys? So I'll be talking about number two, how to trade trending markets. Yeah. So basically, when trading a trending market, you have to look for confluences. So the first confluence, you can look for an order block. The second confluence, you can look for a breaker block. The third confluence, you can look for an FVG. An FVG is basically a fair value gap. I will show you an example of a fair value gap in the video. And the last thing, you can look for a fib level. In my previous video, I talked about fib levels. You can check and confirm. You can check and confirm and learn more about fib levels. You see, guys. So today I'll be talking about order block, breaker block, FVG. I'll not talk about fib levels. So when trading an uptrend or a downtrend, you have to look for an order block. Number 2, you have to look for a breaker block, and number 3, you have to look for a FVG. So let me show you an example of an order block. Let this chart load just a minute. So what is an order block, what is an FVG, and what is a breaker block? So this is our chart. You can see, guys, this is our chart. I want to show you an order block, a breaker block, and an FVG. So an order block, what is an order block? An order block is the last candle that was formed after a drastic movement. Like you can see this red candle, you can consider this candle as an order block. You see, guys, why? Because after this candle was formed, the market moved upward drastically. You see, drastically. So this is an order block. An order block basically is the last opposite candle that was formed after the market made what? After the market made a drastic movement. So for an order block to be legit, you have to look for an FVG, a fair value gap. What is a fair value gap? A fair value gap is basically, let me say in a simple way, a fair value gap is a space between 3 candles. Let me show you something. You see, let's say this is our first candle. This red candle is our first candle. This blue candle is our second candle, and this blue candle is our third candle. So you can see the first candle and the third candle, they have not met anywhere. So in between this, we have a space. This is called an FVG, guys. FVG. I hope you understand what I'm saying. Let me use a box. You can see the space between the third candle and the first candle. That's an FVG. An FVG. For those who are not understanding, basically, let me show you what is not an FVG. You see, like, you can see this. Let me use which candle? Let me use which candle? Let me use. I'm looking for a candle that it can explain more. You can see this red candle. Let's say this red candle is our first candle. This blue candle is our second candle, and this other candle is our third candle. So the first candle and third candle, they have done what? They have met. So they have not left any gap in between. So there is no an FVG here. So basically, I hope you understand what is an FVG. So a valid order block must have an FVG, guys. You got me? That's a valid order block. So this is a valid order block. So what happened when the market made this order block? The market created an order block, then moved upward drastically, and then after some time the market returned to our order block. Let me show how the market moved. You see this? I told you this is our order block. So after some time the market returned to our order block. And what happened when the market returned to our order block? What happened, guys? You can see for yourself. When the market returned to our order block, the market did what? The market continued with the trend. You see? The market continued the trend. So a valid order block must leave an FVG. Let's continue. Number 2, I'll be talking about breaker block. What is a breaker block? A breaker block is what? Is a failed order block, guys. You know what's an order block? Yeah, I told you what's an order block. So a breaker block is a failed order block. Let me show you something. So if the market came and ignored this order block, if the market came and continued dropping, ignoring this order block, this will be what? This will be our what, guys? Will be our breaker block. Let me show you what's a breaker block. I'm looking for a breaker block, guys. I'm looking for a breaker block. Exactly, like, let me show you something else, guys. So this blue candle is our order block. This blue candle is our order block. So, guys, I hope you understand. This blue candle is our order block. So the market was moving upward. See, guys, the market was moving upward. After the market made this blue candle, it did what? It dropped massively. You see, guys, it dropped massively, making this blue candle our order block. But what happened? The market came upward and ignored our order block. So after ignoring our order block, this blue candle became our breaker block. So what happens basically when the market ignores what happens when the market ignores an order block? When the market ignores an order block, it comes back to the failed order block. But what happens? It reacts on the opposite way. So the market ignored the order block, then came back to the failed order block and did what? And climbed massively. You see, guys, and goes upward massively. So this is a breaker block. So a breaker block is basically a failed order block. So number 3, I was saying about FVG. So I'll not talk about FVG because I said I talked FVG when I was talking about order block. So fib level, I'll not talk about fib level. So number 3, I'll be talking about entries and exits. Actually, basically, it's like I've talked about entries when I was talking about order block. Yeah, because I've said when the market leaves an FVG and the market when the market makes an upward movement, leaving an FVG and an order block, your entry should be on the order block, either on the order block or breaker block or what, or fib level. Yeah. So on exit, so guys, if you want to exit the market, when you have entered the market, on exit you have to exit on what, either on the previous high or on the fib level. Like, let me show you something. This is our chart. This is our chart, guys. So if you want to enter on the order block, your exit should be what? Should be on the previous high. So what happened? So the market basically is moving to the previous high. You see, guys, this is our previous high. So the market is coming to a previous high to take our profits. That's the exit method. So let me talk about chart examples, guys. Chart examples. Basically, I'll use my chart. Let me go down and use our chart. So guys, this is our chart. This is our chart. I took this trade. This trade was 1:5 ratio. RR was 1:5 RR. And you see what happened? It came and smashed our TP massively. This is HF 30 minutes. You can check on your trading view. So let me talk about this chart. So the market was moving what? The market was making lower highs and lower lows. You see, these are lower high, lower low, lower high, lower low. So basically, this is on a downtrend. This is on a downtrend. You understand, guys? So why did I take this trade when the market was moving on a downtrend? Why? Because there was something called change of character. So what is a change of character? A change of character is basically when the market breaks the previous what? The previous, when the market was making low highs and lower lows, and suddenly the market reverses and breaks the lower high. That's a change of character. Let me use this chart. So the market made this high. You can see the market made this high. This was a strong high. This was a strong high. Yeah, that was our strong high. So I want to show you what is a change of character.